Michael Carnevale is branch manager and financial advisor. Securities offered through Raymond James Financial Services Incorporated, 400 Southbridge Street in Auburn, Massachusetts, 1-800-657-9126. A member of FINRA SIPC and are not deposits, not insured by FDIC or any governmental agency, not guaranteed by Webster 5 Cent Savings Bank, and subject to risk, may lose value. Webster 5 Cent Savings Bank is not affiliated with Raymond James Financial Services Incorporated. The information contained in this report does not purport to be a complete description of the securities markets or developments referred to in the material. The information has been obtained from sources considered to be reliable, but we do not guarantee that the foregoing material is accurate or complete. Any information is not a complete summary or statement of all available data necessary for making an investment decision and does not constitute a recommendation. Any opinions are those of Michael Carnevale and not necessarily those of RJFS or Raymond James. Expressions of opinion are as of this date and are subject to change without notice.
Good afternoon, ladies and gentlemen, and welcome to Conversations with, the first New Year program with Mike Carnevale, who is going to speak to all the good news that's been happening economically. Tell me something good.
This was supposed to be 30 minutes, but I don't know if we can last that long. But a tough, 2022 was a tough year. If you looked at just the Dow Jones Industrial Average, it was only down 9%, which isn't bad. Unfortunately, the other indexes were down multiples of that, and the average investor lost a lot more than 9% last year. So it's been a tough year. It was a year where kind of things changed from low interest rates to higher interest rates, low inflation to higher inflation. So that's all kind of where we stand here at the first few days of 2023.
We're in 2023, and it will have to work hard to be worse than 2022. But
True.
I give it a vote of no confidence, one way or the other.
Mm-hmm.
But we've had worse years than down 9%, which is what you would usually say.
Correct.
And
yeah.
we come back. What do you think? Do you have any predictions for 2023 yet?
Well, probably at some point they'll be done raising interest rates. Who knows at what point in 2023, but at some point. The economy will bottom out, start to get a little better. It's hard to say right now. I would think probably the second half of the year would be better than, where we are right now. But there's a lot of things going on, around the world, even in our own country that, are uncertain right now, the outcome.
This is about as pessimistic as I have ever seen you.
It's probably a good sign.
I'm buying. Drew, call my broker. Like I have anything to buy with.
Yeah, I think it's, there's an awful lot of, forget the Wall Street side, more like on the Main Street side, there's an awful lot of pessimism. And when that gets to its maximum point, who knows when, that will probably be the time things start to turn a bit. When it's the darkest, it tends to...
It's always darkest before the dawn.
Correct.
Well, you know who Peter Lynch was.
Yes.
He still is. I hope he's still alive.
I think he still is.
He made a statement once. Sometimes it's darkest just before it goes pitch black.
That's true.
Well, we're hoping you're right, and Peter is offered his retirement.
But as I say, if it goes dark for you, it won't matter. Because if you go dark, it's all over, right?
Well, that's always been my feeling. People tell you, well, what if the how are we going to deal with the UFOs and stuff like that? The people from other planets, and can we contact them? Look, if they came 5 galaxies over, They have technology that we will never touch. And you might, at that point, I'll take up drugs and drinking. It's all over. Who cares?
Right.
So it's not all over, is what you're telling.
Correct.
Okay, so
No.
it's not. So give us some hope
No.
here
Well, I think,
on the technical. Already, yeah.
The technical stuff is looking better. You know, December the market was down. Usually December's a very good month. It wasn't this year. So the market was down, Dow was down 4%. So that helped those technical indicators, you know, the four that I like to look at, the New York Stock Exchange 200-day moving average, it was 51. A month ago it's 39. Today that lowers better, meaning right now only 39% of New York Stock Exchange listed companies are trading above their average price of the past year. When does that happen? When prices are down. So that's a good thing. Volatility is up. A month ago the index was at 19. Today it's at 22. Higher is better, meaning that there would be more fear. And when do you get fear? After things have declined, not before they decline. Oscillator is also improving. It was at 96 a month ago. 100 is the worst possible reading. It's now 73. So, you know, it went from being overvalued, the market, to about fair value. And then the greed and fear index, which is a combination of a lot of different indicators. Lower is better. A month ago was 63. Today it's 37. And the fear category, it's in the fear category. And that's good, because when do people get worried? After something bad has happened, or after the market prices have dropped, or their account value has dropped. They don't get fear when things are going up. So the only thing you can say is, based on the technical indicators, if you're looking for the market to go up, we're in a better spot today than we were a month ago. But that doesn't mean it's going to turn around tomorrow. Just an indicator.
Well, yeah.
A lot of it has to do with expectations. So you take a look at, well, where were these indexes? You know, the first thing is someone says, oh, you know, last year was a terrible year, and oh, this year is starting off bad too. Well, yeah, okay, but you want to compare it to some type of indicator. And you can see with these technical indicators, at least on the short-term basis, things are a little bit better than they were a month ago. The technical indicators kind of will tell you the short-term trend, but it won't tell you the specific date of the trend. It just means we're closer to it today than we were a month ago.
We're not able, he's basically telling us we can't pin him down.
Correct.
And that's fair.
Yeah.
That's fair. It's something, you know, it has to go a ways until somebody says, well, pick up the phone and buy something.
Right. Right. And, you know, we may not be there right now. I mean, January is usually a quiet month anyways. You know, a lot of news, not much news last month, but a lot of it was interest rate related. You know, the Fed raised rates, but to a lesser extent than they had been.
Now, why, they had been in the 0.75 clip. Mm-hmm. Why do you think they said go down a little?
Well, if you look at the minutes that they put out, I think they are seeing signs it's affecting the economy. It's slowing the economy down. And that's what they want to do. I mean, in order to slow inflation, slow prices, you got to make it more expensive. So you raise rates.
And you cause pain, like in the Amazon, the 18,000 Amazons were thrown out the door.
Correct.
Now you know kind of why the Fed has to be a, quote, independent agency. Because if it were a committee of elected guys who threw the people out of work due to their actions, they'd never get elected again.
Correct.
So the Congress, the president, they're sort of putting this off on somebody else. Was that in the design? I'm not going to make you answer this question because it's a history question, basically. But was that it baked into the design of the Fed?
Oh, I'm sure it was, to be an independent of...
Well, I know, to be independent.
Yeah,
but,
I think so.
But to be, to not have to worry about the government itself, not to have to worry about the problems that an independent, a so-called or real independent organization might cause.
Yeah, it could be. I mean, the Fed's probably like your parents, right? You want to do all the good stuff, and at some point they tell you can't.
It's also taking away the punch bowl. I've heard all the analogies.
Right.
But who are you taking away the punch bowl from? The guy who might not go to Gstaad this year to ski?
Correct.
Or the guy who has to get 3 more jobs, part-time
Or the
jobs?
person who needs 3 more jobs.
Yeah.
Correct.
And I can't see why we don't have a revolution over this. I mean, I can see why, because the pain probably isn't... You have to wait for a real extreme situation, and not that this isn't bad, a real extreme situation for them to start saying, who are we going to hang?
Right.
But it is, I just want to, from my revolutionary point of view, point out, this is terribly unfair. And which side are you on, by the way? No,
well, some would say life's unfair.
What was that cavalier? He'll be doing improv next week.
Yeah.
Gosh.
I'm testing the waters in Charlton before I head east.
Okay. All right. Bank of England, European Central Bank, the Swiss.
Well, the interesting thing before that is, every year they rotate who gets to vote on interest rates. And there are certain members of the committee who have permanent votes. A lot of them are Fed governors. Also, the only regional Fed bank that has a permanent vote is the Federal Reserve Bank of New York. The other 11 rotate. And so the end of December, 4 left, including Boston, 4 new came on. And so you see, well, what's the mix of the new group versus the old group? And you can only tell based on, what they've written in the past and whatnot. And supposedly the new group is a little less higher interest rate thinkers than the group that was leaving.
So you think that had to do with their 50 instead of 70?
It may have. I mean,
had something to do.
Yeah, when they release these minutes, they scrub all the names of who said what. And I believe it's like 50 years before they'll release what individuals said.
Well, don't we love transparency in this country?
Yeah. So, I mean, you don't never know who said what, but, I think if people who read these things know who said what based on what they say publicly. Oh. And basically, rates continue to go up, around the world, the Bank of England and the European Central Bank and the Swiss all raised rates.
And, of course, Turkey.
Cut again.
Again.
Yeah.
And they've been cutting since. Oh. How
at least a year.
Oh no, they've
longer.
Been. It seems like I know. I've heard this longer. I've never heard anybody say Turkey has raised. Mm-hmm. Now maybe they have at some point, but I mean they seem to. How do they not have really bad hyperinflation? I assume they have inflation.
They do. Oh yeah, tremendous.
But how do they? I mean, this guy, Erdogan, he's not in any danger of being thrown out of office.
No.
How does he do that? You don't know. I don't know.
Don't know, but I suspect that their central bank is not as independent as ours is.
Well, because he's always been sort of a interest rate cut hawk.
Right.
Or dove, whichever way you want to put it on that.
Correct.
Okay. Oil is falling a little.
It is. At one point it was over 100. Now it's in the high 70s. That's positive.
got a $3.19 a gallon yesterday.
I got a $2.99.
$2.99.
Yeah.
Where you got a well in the backyard.
No, 7-Eleven in Worcester.
Oh yeah, okay. So I don't have a passport to Worcester.
Yeah.
Ring count is up.
Yeah. There's more drilling going on, but production is staying about where it has been for a while, 12 million barrels a day. You think things are bad for you? They're also bad for Elon Musk, because he's no longer the richest person in the world.
Oh no!
So when you talked about,
let me rent my clothes here.
well, when you talked about, is the person who's got looking for 3 jobs, or the person who's, off gallivanting, who's being hurt? The richest guy in the world's being hurt. He's no longer the richest.
I know, and that he suffers that badly. Well, I did see an article that they're expecting it's going to be a rich session instead of a recession, a rich people recession. I don't know how much of that is, that somebody wrote something, and I don't know if it was a journal or what. But they have to go quite a bit for it to be worse for the rich than the poor.
Yeah, but it's all relative, right? I mean, where we're saying, when we say, oh, we're now using generic brands rather than the brand name items, right? The other side is saying, oh, we only were able to go for 14 days instead of 12.
I only could buy 1 case of
Yes.
Grey Poupon.
Yeah. Oh, we wanted to stay for 3 weeks, but times are tough. We could only stay for 2.
I don't think anybody at the higher echelon of Morgan or Goldman ever says that.
No.
Even in the worst of times, they
Right.
get bailed out. If they don't, they get bailed out by Holy Mother State.
Correct. True.
But, okay, it's relative. It's always relative.
Yeah.
And relatively worse for the lower orders.
Of course, yes, definitely.
Now, I'm not calling for a revolution. I assure you, I'm not calling you. I don't call the station after. But I just don't understand how it doesn't happen. Okay, so.
Well, I think one of the reasons might be is there is a big middle class.
It's
as
a
opposed
smaller middle class than it was when I was a kid.
Oh, it is, but I mean, it's still the majority.
So.
I think it's still the majority.
At one point, it has to go to the point where people are not, the broad middle is not very good. I mentioned before,
Right.
my father, working class union guy, bought a house, paid it off long before for a tiny amount of money. I think it was, I'm guessing it was around 12, but I'll say it's less than 15. I was supposedly a professional. He said what he sent me to college for. I had to struggle to pay for a house. I mentioned before, my son, founder of a startup, unless it makes it big, he will never have a house of his own. So I'm telling you, that's the decline of the middle class.
Right.
And when it gets to, even he, if he strikes it rich, can't get a house, then they're going to start stringing him up from the, at that point, from the lampposts.
Yeah.
And I can't see a theory where 2% inflation is the goal. It's the goal of the Federal Reserve.
Yeah, I mean, I don't know if anybody believes it.
Well, it's, if it were, even if you could believe it, because it's always worse than 2%.
Right.
Well, you're basically saying there are things you'll be able to do with a dollar other than purchase things with them in say, 20, 25 years. So, it's not, there's something wrong here in River City, as they said in a famous musical. All right. But, yes, he doesn't have any, okay, CNBC delivering Alpha Poll 400 CFO.
Yeah, they do it, every year, and surprisingly, they were pretty upbeat. They kind of, most of them think the stock market's going to go up this year, and they also think that the Fed's, how the Fed reacts is their major concern. I don't think any surprise on that. I was kind of surprised that 66% of them said the market would go up.
Flip a coin.
Yep.
All right, now, the economy, the good news.
Well,
Inflation.
And I know people hate to hear it, but inflation is slowly coming down based on the indexes that the government uses. And you can always say, well, that's not real inflation. How about, I went and bought this the other day and it was up 50%, over the past year. Doesn't matter. It's you got to compare the same thing over a time period, which is what these indexes do.
Like that $80 increase I paid to National Grid this past month. That's
correct.
I gotta love it.
Correct. Yep.
That snack I really like from Trader Joe's.
Yep.
That went from 99 cents
Yep.
to $1.29.
Oh yeah.
Whoa!
Right.
But
But the inflation index that the government uses does show that it's going in the right direction. And, so you say, well, it's still high, yeah, but it's not as high as it was a month ago, or 3 months ago, or 2 months ago. So at least the direction is in the right way.
But we're talking not about inflation itself, but the rate of
Correct.
inflation.
Correct.
And so,
the rate.
So if it goes, if it were ever to go from 100% to 10%,
Right.
they'd they'd let off the fireworks.
Correct.
But it would still be a problem,
Correct.
It's okay.
But the opposite is falling prices. Deflation is worse than what we have right now.
Well, deflation. Why is deflation worse?
Because history shows that people stop buying things, or they postpone buying things if they see or they believe prices are going to continue to fall. So
people acting rationally.
You're right.
It's stupid.
Overall, that would kill the economy.
Is the economy in constant inflation a real economy? What's a real economy?
Oh, a slow increase in prices.
Is a real economy.
I think a slow, predictable increase in prices.
You do know that when we were on, and people hate me, like Gus hates me when I bring this up,
Mm-hmm.
when we, in the 19th century, when we had our most growth,
Mm-hmm.
we had a stable currency.
Mm-hmm.
Why isn't that something we should aim for, a stable currency, with
think-
prices staying what they should stay, rather than eternally rising or eternally falling, or rising and falling?
Well, I think that would be a goal, right? To have
Why isn't it a goal?
the supply and demand.
But supply and demand is different from inflation. I mean, if we have a shortage of lumber, the price of lumber goes up because of supply, not because of inflation.
Right. But that will lead other.
Why will it lead other things?
Well, if
Because
the
we don't.
wages will go up.
We-
Wages have to go up if the price of lumber goes up. Or,
If things are going supply and demand,
Yeah.
and we had a stable currency, the base would stay the same.
right.
So it couldn't just have price rises just because of supply. We can have, you might have to pay the guy who's going out to cut the timber more,
Right.
because otherwise he won't do it.
And that's where the inflation
But
would
that's
come.
not inflation. That's supply and demand.
Well-
because you'll have to not buy something else somewhere else, and the price of the thing that we will forego buying will have to go down in a stable price, stable currency.
That's if everything was equal.
Well, it is stable currency, like it was in the 19th century.
Yeah.
It was.
Okay, that probably not going to happen again.
That's because we don't have a real currency. We have Federal Reserve notes,
Right,
which are tissue paper, really.
right.
But we won't. I've beaten you up enough on this. I want to be cheerful for you because I want your new year.
I don't know if we would be where we are today.
Where are we today?
All the technological advances we've had.
Did we do that because of money?
Yeah.
No. Well, I mean, we did it because you were supply and demand, though.
Right.
If we didn't have a currency like we have now, it would still have happened. Whether it happened faster or slower might be another question.
Yeah, I think it would happen a lot slower.
But I mean, we went from the Stone Age to writing to everything, and nobody would say it was because we had the Federal Reserve that we were.
Right.
So, I mean, to posit that is, is something I can't actually agree with. But you might, all right. Now we went through inflation, leading economic. Let's get those done.
Right. So those again, that's another index. It's like a combination of 10 different items. The stock market's one of them, but building permits are another. Big ticket items like automobiles and washing machines and refrigerators are another. And it could then, they tell you, supposedly the snapshot of the economy. It's been negative for 9 months in a row, 10 months in a row. Had been, 7/8 of a point negative. In November, the latest one was negative by 1%. So there really is no improvement there. Usually history will show if you have 3 straight negative months, that will indicate an increased risk of a recession. So whereas we've had 9 straight, 10 straight negative months, it increases the odds that there's going to be a recession.
Didn't they say that the 3-month thing was a recession? So why is it not a recession?
Well, I think it increases the likelihood.
Okay. Okay. All right.
Or predicts.
Everybody's screaming that. I saw a headline today: real estate. Still in the doldrums.
Right. Right.
Well, one day it'll turn around. Yeah,
Right.
because there's enough houses out there that somebody will lower the price enough, and maybe people will get more jobs.
And some of the prices are starting to come down in certain areas.
Jobless claims.
That's really been the bright spot. Even through all of this inflation, higher interest rates, fewer and fewer people are losing jobs. I mean, it's in the low 200,000s, and history shows that it takes about 250,000 to really start affecting the economy. So it's a two-edged sword, right? The Fed has to keep raising rates until it starts hurting some of these indicators. And
Two other of us lose a job, then it's
that would really be bad.
Oh, yeah.
Yeah. I mean, I could lose a job in 15 years, but not before that. Although I will admit, and I think everybody's in the same boat I am, the job is less valuable as each passing day goes because you're that closer to retirement. So the job had more value Wednesday than it does today.
There's a movie in that, but we're not going to be able to
Correct.
make it.
Correct.
All right, now the employment report.
That's another positive. Part of it is it says, okay, how many people are losing their jobs, but how many people are also finding jobs, and continues to be above what's needed. History shows the economy needs about 150,000 new jobs a month. The month of November, it created 261,000. So you say, well, if the Fed's job is to slow the economy down, they probably will have to continue to raise interest rates until these numbers show some sign of effect on them.
Well, yeah, there are still, and I still see signs of companies looking for people for jobs and not finding them.
Yep.
Did see a report today that about people who have left the job.
Yep.
And it's a younger, it's younger, less educated people.
Yep. And there's also people who are changing jobs because they've got these jobs they can't fill. And I know somebody who last month wasn't looking to change their job. And on a lark, they applied. They're in the supermarket business, and as a lark, they just applied to a supermarket that's building a new location. So I said, "Oh, how did it go?" He said, "You wouldn't believe it." He said, "They offered me $15,000 more a year." I said, "So what are you doing?" "Well, I'm no longer working at the Boston-based supermarket chain." So that's what's out there.
Well, we all have had good days like that, I hope.
Yeah.
And that is a good day for someone.
Like, and this person said, "I wasn't looking," and it just as a joke, I said, "Let me see what they're offering," and it was like stunned.
Good luck to the man.
So the Merrimack Valley chain is probably a good place to work.
I know. Is it the one that had that slogan, "From the basket to the casket"?
Yes.
Okay.
Yes, it is.
I actually knew that before you.
Okay.
Where are they moving?
Shrewsbury.
They're getting closer.
Yep.
Yeah, they. Amazing how they survived that debacle, that family debacle.
Family debacle, yeah.
How can you do that? Don Vito is ready to kill
mean,
Fredo.
Yeah.
And
Yep. It was amazing.
the guy's got to be a pretty smart fella.
I would think so. I mean, but yeah.
That's why I haven't gone into the grocery business. I was thinking of starting a chain, and I decided he's smart. I'll let him do it.
A lot of long-term employees have done well there.
That's why they had the term from the basket
Yeah.
to the casket, because
Yep.
they were loyal to the death.
Yep. Yep.
And like most of us are at our jobs.
Yeah. I mean, I think, certain industries have different.
If you're offered 15,000 more.
Right. Right. I mean,
This has been another rollicking Conversations with Mike Carnevale. A lot of fun, and we will be, no matter what anybody thinks, we're not changing jobs. We'll be here next month. This is a Long Hill Report. Richard Morco saying goodbye.